All right, so Devin Sizemore here. We're here with an expert interview with Stephanie. Stephanie, why don't you go ahead and just tell our viewers who you are and what you do?
So, hi everybody, I'm Stephanie Yamashiro, and right now I am currently a financial services professional. I am affiliated with New York Life. So, I know when people hear New York Life, they're like, oh, life insurance. And yes, that is 100% one of the things that I can do for you. I try and take a holistic approach with everybody I come across. It's my job to make sure that your wants and needs are met in your whole financial preparation. And I do use life insurance as part of that. I also do utilize investments and things like IRAs and Roth IRAs. And I also, use long-term care and some annuities. So I have a lot of things at my fingertips that I can use to create plans for people that are suited to their needs and wants and goals. And, we try and make those plans as flexible as we can, because if you're planning for retirement or planning for your kids' education, it needs to be able to move with your life and how your life changes.
Awesome. How long have you been in the industry, and why did you get into the industry?
So I am actually relatively new. I've only been in the industry for 2 years. I feel like I've learned so much in 2 years. I've gotten all my licensing, and I came from a corporate world. So I was in the corporate world for 12 years. And now that I'm out, I can't see myself ever going back. I love what I do. I love that I can personally impact everyone I come across with their lives and just improve upon it. And that is so much better than what I was doing before. It just makes me so much happier.
That's awesome. I totally got that out of getting to know you, is just your passion for the impact you can have on people. So I love hearing that. Let's talk life insurance, right? I know it's a core of what you guys do. When do I need it? Why do I need it? What are some triggers or key things that someone should be like, hey, this might be a time to have a conversation about life? What are some of those key milestones?
So, what I will say about life insurance is I know people in their 20s and maybe even early 30s don't think about life insurance. Before I got into this industry, I'll be honest with you, I didn't think about life insurance. I really didn't. I knew kind of what it was, and I was just like, it's there. And I had the same misconception that a lot of people had, that you get it when you're older. That's when you need it. However, the issue being is life insurance is based off of your health. So if you wait when you're older, it just gets more expensive and it gets harder to qualify for it. And to be honest with you, this past few weeks, I've unfortunately had a lot of phone calls from older people wanting life insurance because they're realizing, they're like in their 60s now, and they're like, oh my goodness, I need to be able to help my kids. If something happens to me, how are they going to pay for all these things? And they're realizing the value in life insurance. But now, they're in their 60s, and it's more expensive. It really is. And so if you plan ahead and you think about this in your 30s, it's so much more affordable. And it's just something I know people in their 30s don't think about, but it is important in certain life, milestones. If you have any assets, right? If you have a house, or if you have kids or a spouse, or basically anyone that you feel like you will be financially responsible for in the end. And then at the end of the day, you are responsible for you. At some point, you are going to get old, and at some point, someone's going to be taking care of you. And how are you going to leave them? Like, what situation are you going to leave them in? Are you going to, people don't think about it, but hospitals are businesses. So if you get ill and you go to the hospital, your family isn't going, oh no, don't do that. That's too expensive. Don't do everything to save your life. They're going to want them to do everything to save your life. And that comes with a cost. So, the idea that you don't want to leave your family with outstanding hospital bills, with outstanding debt, how are they going to pay for taxes? Are they going to be displaced from their home? Things like that. And unfortunately, life insurance is something that is easier to get when you are younger. And those are things that people in their 30s don't think about.
Awesome. Can you talk about what kinds of life insurance there are, right? Like, it's all just one size fits all, right?
No, so there is no one size fits all. So there are two basic types. There is what we have term insurance, and then there is what we have permanent insurance. So I feel like term insurance is kind of what everybody really knows about. So when people hear the word term insurance, I want them to remember the T, and that the T is for temporary. So what that means is it only lasts for as long as you are paying into this plan. So if you get a 20-year term for $500,000, say you are 30 when you sign up, that means you're essentially going to be 30 on paper for 20 years. And then once that 20 years is up, all of a sudden you're no longer 30 on paper. All of a sudden you are 50 on paper. And then guess what? The insurance company is going to come back to you and go, hey, your term insurance is up. You did the 20 years, now you're 50. If you want to keep this coverage, it's going to be 3-4 times more expensive because you're no longer 30 on paper. Now you're 50. And part of the issue, and I'm not saying term insurance isn't great, term insurance worked together with permanent, or even if you don't have the funds for a permanent insurance and you want some initial coverage, term is great. You can get a high amount of coverage typically for a smaller dollar amount. It's like renting an apartment, right? You don't own it, but it's something. And a lot of people need to start there, and that's fine. But there is that time limit to the term. And if you're getting term in your 30s for like 20 years, I mean, chances are you're going to live well past 50. So the amount of coverage and the length of coverage, ends there. With the permanent insurance we have, typically the one that people know about, that's whole life. And whole life is one that is more like buying a house. It's a little more expensive upfront for a little less coverage. However, that coverage is forever. It's no matter how, when, or how old you are, you're covered and you've locked in that health. So if you're 30 on paper forever, right? And it's like buying that house because you get equity. So you're building cash value in this life insurance policy. The legacy benefit grows with it. So your insurance coverage grows up, along with over time with this policy. So you're getting cash value, your coverage is increasing over time. So it meets more needs, and it's definitely more long-term because, at the end of the day, you're always going to be a parent, right? You're always going to have someone to care about. And the idea being you want this policy to outpace inflation because the cost of everything goes up with it, right, as time goes on. So that's the difference between term and permanent. We have another permanent insurance policy that's tied to the market. That's more like a Roth IRA, where the assets grow tax deferred and come out tax free. And it is tied to the market. So if you want that kind of policy, the value of the cash value will go up and down with that. So it just depends kind of what you want. The whole life is not tied to the market. It's only guaranteed to go up, and those assets grow tax deferred and come out tax free too. And what I feel like people don't understand with the permanent insurance is it can be used to supplement your retirement. It can be used to help with a down payment on a house if you have enough cash value in there. This is money that you can access before you're 59 and a half. So
awesome. Great information. Sounds like people definitely need to sit down and have a conversation, not just go out and do it on their own. So that's good. I know last time we talked, you were talking about some long-term care and some other options in that world. Could you give us some education on what exists there, why we might need a policy like that, when to buy it, things like that?
Yeah, so long-term care, the best way I can describe it is kind of like car insurance. You're putting aside a pool of money and you're either going to use it or you're going to lose it, right? So the idea with long-term care being is you're putting aside a pool of money for skilled care essentially as you age. And a lot of people don't want to think about this. And I have a lot of people tell me, oh, my kids are going to take care of me. I don't need it. And then I'm always like, well, have you had that conversation with your children? Do they know like that's your plan, that you're basically telling them they're going to take care of you? And I'm not saying that's a bad plan, and I'm not saying that kids won't do that for their family, but as someone who is currently in the situation with her grandmother who doesn't have long-term care and she is ailing and she's got early onset dementia, it would be very helpful if she had a long-term care policy and I could access that money to help with skilled care, because the relationship shifts, right? So I'm no longer a granddaughter, I'm now a caregiver. And there are some days I'm a granddaughter and there's some days I'm a caregiver, and it's hard, And the idea, if you have this money put aside, your family can remain your family. And that's really important. And the idea is everyone is aging, right? And we're all living longer, and the idea being that you have this money put aside so that you are taken care of, you're taken care of correctly by a skilled nurse, because as much as we love our kids, right? Do you want them to help you bathe or change your diaper if it comes to that, or help you dress? Because that's what it may come down to as you age. Not everyone ages as gracefully as everyone else. It's all individual process. And the idea that you have this pool of money set aside, it's just really, I feel, more of a peace of mind. And long-term care, like life insurance, is something that is cheaper the younger you are, right? And it can be pricey. The laws on long-term care have changed recently, so the policies are a little more expensive. My company has structured it in a way where we want to help our clients as best as we can. So it is a little more pricey up front, but as you age, the policy should get cheaper for you. And that's just kind of how we structured it. And yeah, and it also depends what you need. I'd need to know your family history. And the idea being with long-term care, try and get it before you're 50. Because once you hit 50, it gets a little pricier even then. And because it is a type of insurance, we do have to do more tests to make sure that you qualify for the long-term care, because we are insuring you. It's very expensive. So
Awesome. Great to learn about that product. I know it's something that I probably need to look into, and I dealt with the grandma who didn't have it either. So, it's one of those things where it's like, yeah, it does start depleting the inheritance or anything that might be passed on, or completely wipe it out. So it's great to hear that. Can you give me a success story, someone you've worked with where maybe they had policies in place and you're able to dig in and maybe restructure some stuff to really provide benefit for your client?
yeah, so I've worked with some clients who gotten life insurance policies with other companies. And I mean, just like everybody else, I'm so lucky. I have an amazing group of friends and family that have supported me through this career change. And I feel like a lot of people that I come across have done that as well. Oh, you're doing this, let me support you, let me do this. And then they kind of look at their policy, and I have conversations with them and they ask me to review said policies, and it's kind of like, well, you don't have a living benefits rider, which gives you the ability to access the money sooner. Like if you get sick, a lot of treatments are not unfortunately covered by our insurance. So you can access your insurance policy with the living benefits rider as funds to pay for those treatments. And there's no disability waiver of premium, which basically means is if you get hurt and you can no longer do your job, the insurance company is supposed to continue paying your policy until you can work, or if you can never work again, we'll pay for it forever. That's how my company works. If you have a whole life policy and you've got 30 years left and you are 30 years and you still can't work, we'll pay your policy for 30 years, and that's something you don't have to worry about. And then you have the coverage. And there's so many things and ways that these insurance policies can be structured to the benefit of the client so that they don't have to worry. And I find that a lot of people, when they initially signed up, they didn't know what questions to ask. And once again, they were just being really good friends and trying to do a favor. And, when I review these policies, they're not structured to their benefit. So I've had to, unfortunately, rewrite some policies from some other people and just make sure that the policies almost didn't collapse in on themselves. Yeah.
That's awesome. What trends or changes are you seeing in your industry? Anything noteworthy or anything you're paying attention to?
So the trends I'm seeing is that younger people are reaching out, trying to get quotes for life insurance and all of that. And I find that to be very interesting. And I don't know if that's due to the pandemic or that's just due to the younger generation just trying to be more informed than their parents were. So that's been interesting, having younger people reach out and going, hey, I'm thinking about this. Can you help me with that? And I find it also very interesting too, that the younger people are not just doing everything online, which I guess maybe I shouldn't stereotype. Maybe that's just me, but I am 38. I don't look 38, but I'm 38. And so I find it interesting that I'm coming across these people in their mid to late 20s, and they're not doing everything online. They're actually trying to find a real person to talk to. So that's been very refreshing.
It's interesting to hear that, right? That the younger people are looking. I know they need to. I mean, it's especially on the investing side, right? It's compounding. And as you mentioned a couple of times, right? The cost of some of these programs is much, much cheaper when you're younger to get in place. And I wonder if that is pandemic driven or I just, education driven. I don't know. So it's good to hear that. And hopefully we keep seeing that trend. Um, what are some other tips or tricks or questions someone should ask? What else do people need to know if they're looking to make a purchase or change something?
Always have your paperwork and always have it ready to review, and just be open to that review. Sometimes I have to be the bearer of bad news, especially if people were working with other friends, and it's a very delicate process to kind of let them know that, well, maybe you were kind of led down the wrong path and this would be my suggestion, and it's the complete opposite of what that other person suggested, right? And that's always delicate when it was like a friend that set them up, or the brother-in-law, or something like that. And so that's always a bit tricky. But yeah, just be open and listen. You did, especially if you were the one that reached out. And we don't like giving bad news, but sometimes we have to. The other thing that I would stress that people think about is, right now with the current environment and with people in my industry projecting taxes to go up, I would really suggest people to not just diversify their portfolio with the types of investments they have, but diversify their portfolio on a tax strategy basis as well. So really being aware of your three tax buckets, and everyone has access to these three tax buckets, right? It doesn't matter how much you make, how little you make, it doesn't matter, where you live, right? So you have your tax now bucket, which is your, like if you own property or if you own a business, that gets taxed every year, right? And then you have your tax later bucket, which is basically everyone knows what a 401k is. So you are deferring taxes till later. So you don't pay taxes on the money now, but when you go to access those assets, that's when you pay taxes. And then you have your tax never bucket, and that is what we consider your Roth assets. So you're putting money into assets that you've already paid taxes on. So essentially money coming straight out of your checking account is the best way I can explain it, right? And I would highly suggest people to, and I feel like a lot of people I come across have assets in their taxable buckets and their tax deferred buckets, right? They have a 401k, they have property, they have a business, whatever it may be, 403b. But a lot of people tend to not utilize that tax-free or tax never bucket. So highly encourage people to think about tax strategies, diversifying that, getting a Roth IRA, getting a life insurance policy, because like I said, those permanent insurance policies, the money grows tax deferred, comes out tax free like a Roth IRA. And the difference being there are no limits. With the Roth IRA, there's a $6,000 limit, and with the life insurance policies, you can put in as much as or as little as you want. So there's a little more flexibility there, but those are two of the best ways to tax diversify your portfolio, so that hopefully you don't outlive your money. So
Great advice. I know it's hard sometimes to like people don't want to show you what they already have in place, but it is definitely one of those times where if I don't understand what you have, I can't give you advice. So you have to be transparent and have all the cards on the table. And then yes, taxes. I'm glad you brought that up. I love that. You got to look at the tax impact, right? What's it going to do today, tomorrow? When you're younger, some of those choices are very different than when you're older. So it's key to look at that. Kind of shifting to the audience we're talking to. So we're talking to professionals, we're talking to business owners. They're the kind of people who are going to watch and consume these expert interviews. So let's just talk business. What's one tip you would tell someone who's getting into business or trying to take things to the next level? What's one thing you would tell them?
The one thing I would tell them, actually, there are a couple of things. If you're getting into business, please, please, please have everything on paper. Contact a business lawyer, get everything written down. I know too many people who've gotten into trouble just by doing handshake deals. And while I think handshake deals are great because you're trusting the other person to uphold their end of their deal, and I'm not saying anybody's a bad person at heart, but I'm saying nobody's going to protect you but you. Nobody's going to pay your bills but you, right? So have everything in writing, please. Get some sort of business lawyer involved. And then my next thing after that would be you please work with an estate planner of some sort. You need to have all your affairs in order, especially when you have assets involved, right? And it needs to be handled properly, and it needs to be done with the correct verbiage. It needs to be notarized and recognized by whatever state you live in. And it needs to be updated frequently. Any life changes, um, or if there's no life change, every 10 years, right? And the way that I come into play with that is the life insurance. You should get that too, because if something happens, that's tax-free income that your family can get a lot quicker than potentially through your estate plan. But all of those are, I mean, you said one, but those are the three things I would highly suggest, because if you're starting a business, you are looking to make money, you're looking to grow that asset, right? And you need to have all those things in place. You need to have your business house in order, which means you then need to have your personal house in order. And to cover and protect all of that, the life insurance will umbrella both of those houses. But definitely, please, no handshake deals. Don't write out your wishes on a piece of notebook paper. Like, please have it all done properly.
More great advice. What's up on your personal journey? So you've had a great corporate career, you've now launched off on your own. What's something you've had to overcome or you're still trying to work on honing in that you think people should pay attention to?
Honestly, my time management. I went from being behind a desk for 12 years and being told what to do and how to manage my time, and then moving into this where my time is my own. I'll be honest with you, the first 3 to 6 months was so hard. It was just kind of like I had to make my own routine. I had to make my own lists. I had to, all these things that I had been told what to do, what order to do them in for 12 years, and having that shift of having to be my own boss and having to go, okay, this is what you're going to do, and you're going to do it because it needs to get done, and this is for you. And it's the shift of working for yourself instead of working for somebody else, right? And knowing that I'm the only person I really have to answer to. That was really hard, and it was a really scary concept I had to get over. And still to this day, some days I still struggle. It's a work in progress with my time management. It's like making my calls or making sure all my admin work is in place. Who wants to do that? So, but I mean, I didn't adult yesterday, so I ended up doing admin work till about 10 o'clock at night because I didn't manage my time properly yesterday. And I'm on track better today, but once again, it's still I have more days definitely that I manage my time better, but I still have a few slip ups with that.
I liked your time management. That's definitely probably one of the top three I hear. And thank you for being vulnerable and just being honest about that. It's something that every professional, especially when you work for yourself, you're going to deal with, right? When do you stop? When do you start? How do you hold yourself accountable because no one else is? When do you work the long days? When do you take days off? Where are those boundaries and buffers? It's really interesting, and it's something that I think we struggle with forever. So yeah, that's great. So we're right at the end of the time. Anything else you want to say on any of the topics we've covered today, or any other business advice? Anything else you just want to leave our viewers with?
Um, yeah, I think I would just really want to remind people that nobody's going to take care of the older you like the younger you now. So it is never too early to start thinking ahead. I don't care if you're 22. I don't care if you're 55. If you haven't done anything, now is as soon as it's going to get. And the one thing I would like to remind people is the only thing I can't give you is time, right? So you either have it, you don't, you either have more of it or less of it. And I will tell you that time is such an important part in putting aside goals and, planning for the future. And the more time we have to work with, the more successful you will be.
Awesome. Stephanie, thank you for your time. I appreciate all the knowledge you've shared, and again, being vulnerable on things you're working on and overcoming and challenges. I'm sure that the viewers will find this very informational, and they'll be able to reach out to you through the form below the video if they have any questions or want to have further conversations with you.
Great. I look forward to it. Thanks, Devin.